All right, so this video is for new B2B startups, how to ensure you dominate a market. So in this document, I'm going to be sharing how the underdog, so a new startup into an existing market, can become the category king in just a few short years without having to raise millions of dollars in venture capital. So in this document, I'm going to be sharing talking a bit about the strategy side of things, and then towards the second half / last quarter, be talking about the tactics, the actual activities and inputs you can be focusing on to do this. And so real life example, I always like to sort of share evidence of the things I talk about actually happening in real life. So this is the G2 grid. So G2 is a review platform for software. So buyers go onto G2, they look for different softwares that they want to purchase, and they can see what people think of them. And so here's the G2 grid for email marketing, the product category email marketing. And so basically they've just got all of the software products in the email marketing category, and plotted them onto this grid. So in the bottom axis, we can see satisfaction from niche to high performers. And then on the right, we can see market presence, I guess from, high performers to leaders. And so I want to draw your attention to this company here called Instantly. So Instantly is, I would actually put them in the sales engagement category, but they're in the email marketing category. They entered the market only maybe like 3 years ago. And just for context, email marketing is probably one of the busiest or most competitive product categories there is in software, in the SaaS industry. Very, very busy, as you can see by all these logos. And as you can see, in just 3 short years, they've managed to become one of the category leaders in email marketing. And it's really important to note, I can see, companies like Apollo here. It's really important to note that most of these logos around them have raised millions, if not tens of millions, in some cases hundreds of millions of dollars in venture capital, and yet Instantly is still outperforming them. Whilst being bootstrapped, Instantly haven't raised a single dollar of investment. And so this is a real life example of an underdog entering a category and coming out on top in just a few short years. And the reason why I mention Instantly is because I've worked with them. I still work with them today. I've worked with them for over 2 years, and they've grown from 0 to 20 million ARR in 3 years. They're well beyond that now, completely bootstrapped. And there's a testimonial of our partnership on YouTube. If you want access to that, just let me know. So if it's your first time coming across a piece of my content, just a quick background on me. So I've worked in the SaaS industry for the last 5 years. I started off in-house, so I've worked at multiple startups. Most recent one, I was employee number 10-ish, responsible for things across go-to-market, and also helped out with the product roadmap as well. I then founded my own marketing agency / consultancy, where I've worked with dozens of B2B startups. So I've only worked with B2B SaaS companies, helping them go from 0 to 10 million ARR and beyond, Instantly being one of those. More recently, I'm the co-founder of growsas.com. We help early stage B2B SaaS founders hit their first $1 million without having to raise venture capital. More information about us and case studies on the website. I'm not going to be pitching us, not going to be talking about us too much, just really more for background context. And then at GrowSAS, I co-founded that with Will. He built and sold a software startup for $2 million as a 21-year-old. Collectively, we have over 20,000 hours first-hand industry experience. So that's just in the SaaS industry as practitioners, not how long we've been working since 18. And we're both building our own B2B SaaS startups as well. So we're not full-time YouTube creators. We also build businesses. If you want to break down about what we do at GrowSAS, how we help companies reach that first $1 million, just comment the word green on this video and I'll send that over to you, or you can just go to our website and figure it out from there. Okay, so that being said, who is this video relevant for? So ideally, you're an early stage B2B SaaS founder. You are about to launch a B2B startup, so maybe you don't have a product yet, but you're about to go to market. You want to be as capital efficient as possible. So perhaps you're low funded, maybe you've raised a bit of money, or you're just completely bootstrapped or self-funded. You are willing to delay gratification rather than seek immediate results. And this is an important one. This strategy is long-term. It's a long-term game. It's a long-term game of chess and strategy, but it has extremely big prizes. And so if you're looking for, quick, short-term growth hacks and gimmicks, certainly not the video for you. And just in general, my content probably isn't suitable for you. And then finally, if you are ready for hand-to-hand combat, things like automation and scale come later when you've validated a profitable business case. Too many times I speak with founders, they're doing $500 a month, $1,000 a month, $2,000, $3,000, $5,000 a month, and they're already looking for a way out. They're already looking for someone to delegate or outsource their work to, and it just doesn't work like that. Until you start to feel the pull of the market, really it's you, the founder, the co-founders collectively that have to be that driving force in your business. And that's what I mean by hand-to-hand combat. You need to be comfortable with rolling up your sleeves and just doing the grunt work. And there really is no alternative to that unless you just want to raise loads of money, hire a large team, but then you sort of build this company on sand that doesn't have good foundations, and then that's when things start to go wrong. So if you match this criteria, then definitely in the right place. So the core thesis, sort of core argument that I'm trying to make in this video is that startups don't fail because they are unable to build good products, but because they attempt to solve multiple problems concurrently for multiple groups of people. Therefore, they struggle to find traction with any given group and run out of cash before feeling market pull. So I'll get into what I mean by that. And so like I said, there's a few things I'm going to talk about, some like strategy, just like some concepts and frameworks I want to talk about that are going to help you understand this strategy of dominating a market. And then towards the end, we'll have some activities and inputs that you can do on a daily, weekly basis to achieve that. Discovered cold brew recently, absolute golden nectar. Okay, so he who chases two rabbits catches none. So let's get into this. So prioritization is a superpower and often a matter of life and death in startups. By attempting to solve a range of problems for different groups of people, you end up doing an okay job for everyone to justify month-on-month growth, but never a great job for an individual group of people, resulting in poor organic growth, activation, and retention that's required to fuel hypergrowth. So quickly riff on this. So when you target too many personas or too many groups of people, or you focus on solving too many problems, you end up just doing an average job rather than a great job at something. And in most cases, it's not so binary, right? It's not like you either fail or you succeed. It's usually never that clean cut. Often the case is your business is still growing month on month. Maybe you're just breaking even every month. You're still able to pay your team's salaries. You're still able to acquire customers, but you're never really able to achieve that, that breakout growth, that growth where you truly feel the pull of the market, and you become the hot person in town. And so, what does that lead to? Well, the probability of you having that huge exit is just far lower than if you were able to achieve that hypergrowth. So that's typically what happens. It's not like one day you wake up and your company has just failed. It's that you're just never really able to achieve that true pull from the market, which is going to help you build, a 10, 50, $100 million business. It's similar to restaurants that offer multiple cuisines. Maybe this isn't in the UK. This is certainly a thing where you'll go to a restaurant, they'll offer Thai food, Chinese food, Mexican food, maybe some like Lebanese or Middle Eastern grilled meats. And so for me, at least, the first thing that pops into my head is, well, there's no way these dishes are going to be great, right? There's no way I'm going to get a good taco here or a good burrito if they're just offering all these cuisines. And so then you think, well, if they're doing all these things, they must be cutting corners, right? This food must be cheap. It must be unhealthy, filled with oil, processed, fried food, just, not good food. And so then you start to think, well, what are going to be the negative consequences of this? Like, sure, I might get a quick fix, but I'm probably going to suffer from this tomorrow morning. Whereas if, let's say you craved pizza specifically, well, then you would just go to a pizza restaurant, or at the very minimum, an Italian restaurant, because, it's what they do, right? Pizza is Italian food. And so why you go there is because you've been there before, or you've heard the recommendations, right? You know grandma's secret tomato recipe that's been passed down the years for decades absolutely slaps. You know their homemade garlic mayonnaise that they have combined with their wood-fired crusts from the pizza is next level, and it's just a mouth-watering experience, right? If you want pizza, you're going to go to a pizza restaurant that has a good reputation or just focuses on that thing. And it's going to be a far different experience than, you know, that oven-baked pizza that you're going to get from the all-you-can-eat buffet for $15, right? Completely two different experiences. One restaurant is focusing on multiple things, and then one restaurant has focused on just doing one thing or like a small group of things really well, right? As it says here, one of these restaurants is known for their pizza. They have several hundred 5-star reviews and are recommended on travel websites as the place to go when you visit town. Like, word of mouth has spread. The other restaurant is just somewhere you go when you need a quick fix. They have dozens of 2, 3, 4-star reviews, you know, reporting cold food and poor customer service because they've had to cut corners, right? Because they just can't simply do everything to a good standard. And so if we bring this into the world of B2B, if you're a VP of marketing and you go to a company's website, do you care if this product helps chief financial officers and they have case studies to prove that they have helped CFOs? No, like, you don't. You only care about the product working for you. And if anything, it could be seen as a red flag. It could actually leave a negative taste in your mouth. You want a product that solves your problems. You want a product that is going to help you achieve your monthly goals, your quarterly objectives, is going to help you get promoted. You don't care about how it benefits CFOs, right? So this is like, just to really hit this point home, when you spread your focus too thinly, whether that be by targeting different personas, whether that be focusing on multiple problems, you're just simply never able to do one thing really well. You want to be known for the company that does one thing really well. And this is one of your superpowers as a startup, is being known for doing one thing really well. And so if you can't be better, try to be the only. You're not going to be able to outcompete your competitors in all these different things. So you need to narrow your focus and try to be good at one thing, do it really well. So when first entering the market, it's highly unlikely you will be better than incumbent companies. They've had years in the market, right? So they've had time to collect market insights. They've experimented a lot. They've learned, they've failed. They've done things well, right? They have insights. They've been able to hire great talent. They have brand affinity, and they have a base of loyal customers, right? So it's really hard to just go head on with these companies. They control the market, and you're the underdog. But all that glitters is not gold, right? For these companies, it's impossible to get everything right. Often you'll find, if you look deep enough, you'll find disgruntled customers who are unhappy with maybe their customer support they've received, the product progress. Maybe they've put in feature requests like several months ago and nothing's happening. Commercial terms, maybe they're tied into long-term contracts. Maybe the company keeps upping their price and sort of squeezing their customers for as much juice as possible, because this is what happens with big companies. This is how they get bigger, right? They have investors breathing down their necks. They need to hire more people. They need to hit their aggressive growth targets. And usually it's the customers who feel the brunt of that, amongst many other factors, right? Whereas as a startup entering a new market, if you can identify these chinks in the armor, these can be your points of leverage. They're absolute gold dust. You know, when I worked at a startup, even though our product was priced more expensive, sometimes 2 to 3x, than other products that had been around for much longer, decades. They had much larger presence. Companies or customers of those companies would still switch over to us because our customer support's average response time was 20 minutes instead of 48 hours that they were experiencing with those companies. And the 48 hours would just be an email from, you know, someone offshore, just kind of sending an email that didn't help them at all, just letting them know they were looking into it. So they didn't actually come with any solution. They were just starting the conversation. And also just our product was easier to use. The time to value was quicker. People were willing to pay 2 to 3x more because of the customer experience was much better. So I'm going to be sharing at the end of this how you can discover these, you know, chinks in the armor that can become your wedge, your lever to enter a market. You know, your probability of succeeding is going to be far higher if you focus on these small surface areas, do it really well. And then once you've got that traction, that proof of concept that you can do that thing well, or you can solve those problems for that small group of people, that's when you start to expand. You need to start small rather than having all your cake at once. And so go deep, not wide. So in the earlier stages, it's better to go deep rather than wide. The goal should be to simply solve a problem well for one person, right? This is the mindset you need to go in. It's easy to think, I want to build a $50 million, $100 million business. Okay, I need to have 10,000 customers to achieve that. But you don't start off with the way you approach this is you just need to get one customer. And then when you get one customer, you can get two customers. Then you get 5, then you get 10, 50, 100. But it all starts with that one customer. And so with this mindset, you're able to over-deliver, because if you only have one customer, then you just need to do whatever you can to delight that one customer. And you're going to build loyalty. And then hopefully, because you've over-delivered, you're able to get case studies. And those case studies are going to act as a proof of concept to then attract more customers. Hey, I helped this person just like you. And from the customer's perspective, the likelihood of you helping them is going to be far greater than if you didn't have case studies, right? And so something I want you to take away from this is, if you can't be the best, then attempt to be the only. And the probability of you being the best as a new product into an existing market is extremely, extremely low. So just try to be the only. Try to do something really, really well. And if you can't do this, if you can't solve a problem well for one person in the early stages, then this will cause later issues, because in business, problems don't just scale linearly. They don't just go 1 + 1 = 2. They are magnified. They are 1 + 1 = 10, right? So if you can't solve a problem for one person or a small group of people, then what makes you think you can solve a problem for multiple groups of people, right? Your problems are just going to expand. So this is why most funded companies fail, right? They raise loads of money. They just hire great big teams of people. They layer on all these processes, but they never really nailed those fundamentals in the first place. They never really solved an urgent problem, or they never really solved the problem better than anyone else. And so regardless if they have more people or processes, at the end of the day, if your product isn't delivering a transformation to its customers and your customers aren't happy, then you don't have a business. You just have, something that looks great from the outside, but really it's, this castle that looks great from the outside, but really it's built on sand, and eventually it's going to crumble. And this is why most funded companies fail, is because they never focused on the fundamentals. They just focused on, hiring large teams of people and trying to brute force their way to product market fit. So an easy way to illustrate this by, going deep rather than wide. So the biggest area we've got here is an industry, right? So an industry could be the tech industry. So this includes all companies involved in technology production and services. You then have a market, which is a layer beneath this. So we could have the software as a service, the SaaS market, right? So these are companies that provide cloud-hosted software. We then go a layer deeper. We have a niche, right? So this is a niche within the software market. So this could be mid-market MarTech companies that operate a sales-led growth model and receive more than 100 demos per month. So see how we've gone from, okay, I work with tech companies, or even I work with SaaS companies, to I work with this very specific group of companies. And then we go a layer deeper, and it's like, well, okay, what personas within those companies do I target? Well, I target heads of marketing, because a head of marketing is going to have different problems, different desires, to a head of sales or a head of customer success. And so we don't just stop at the company level. We need to go a layer deeper to the people within those companies, because that's how you're going to find those juicy problems that people are willing to pay a lot of money for, or if they're not the one who holds the budget, they're willing to be a big advocate for, right? And they're willing to push that purchase decision in the business, right? And so narrowing down like this, or niching down, enables you to focus your efforts and solve a problem or set of problems really well for one persona. And then what you can do is, when you've solved a problem really well for heads of marketing, then moving over to head of customer success or sales is going to be far easier, right? Because someone in their business is going to be an advocate for you rather than you coming in cold. And so, don't try to solve problems for all these groups of people at once. Focus on one persona, and then you can expand. And so to talk about this strategy in a bit more detail, I want to introduce wedges and beachheads. You've probably heard of these, but just to hammer the point home, excuse the pun. So a wedge strategy focuses on a specific problem or feature that is not adequately addressed by current solutions, serving as a narrow entry point where energy can be concentrated. The wedge aims to differentiate and gain initial users by addressing a unique pain point. In simple terms, your product does one thing very well to get an initial foothold. So this is a wedge visualized, right? So it's a small tool where you can direct focus, which is going to be your input, and your output is multiplied. So a real life example of this is in mines. They use wedges, so as you can see here, these little metal tools, to split rocks that are, probably several tons, right? But because they're concentrating the force in such a small area, that force is then expanded and they end up splitting a rock that is probably like 7 or 10 tons, right? Just with a small hammer and some wedges. So some examples of this in the SaaS industry. So Twilio, I'm not sure if that's how you pronounce it. They started with an API to do SMS. Now it's a $10 billion public company that is the go-to communication platform, right? So they started with one thing. Stripe, they started with payment APIs for startups. Now it's one of the default payment providers for online businesses. So they just started to do, basically they made developers' lives easier for implementing payment infrastructure in startups. They just focused on that one thing and then they expanded. I believe they actually started, their first group of customers were in their YC batch. And now, basically, if you start an online business, you don't even think of anything else. You just go straight to Stripe. A beachhead. So a beachhead strategy focuses on a specific, well-defined market segment as an entry point to gain a strong initial presence. It aims to establish a strong market presence and build a foundation for expansion. So in simple terms, you solve a small group of people well before expanding. And this term comes from military doctrine, where invading forces focus on a small geographic area, which is known as a beachhead, to overwhelm the enemy and quickly capture territory before launching further attacks. So this example here is of the D-Day invasion, where Allied forces focused on the Normandy beaches within France, right? So this was the invasion of Europe, right? And their beachhead were these Normandy beaches inside France, right? So if they tried to invade France from all these angles all at once, well, the forces are just going to be spread too thinly. So they narrowed their focus, small geographic area, overwhelm the enemy, gain a foothold, and then expand into the territory, right? So the exact same example, concept for business as well. And so some examples: Amazon started selling books. Now it represents 37% of the USA e-com market. Uber started as a premium service for affluent San Fran residents. Now it represents 25% of the global taxi market. So they focused on this small surface area, and then now, dominating the world. So typically wedges are focusing on a problem. So therefore, like product features and capabilities that solve that problem. Beachhead is focusing on a market segment or a niche. That's kind of the difference between the two. And so let's say you execute these strategies well, when do you then expand? When do you go inland? And so there's no definitive metric to monitor this. The simple answer is when you feel like you've hit the ceiling with where you're currently focusing, then you can expand. So this can often be measured through volume metrics such as net new logos, pipeline, and month-on-month growth, along with efficiency metrics such as conversion rates, customer acquisition costs, or your CAC payback, and overall magic number. So you expand when you feel like you've hit your ceiling, basically. When growth is starting to slow down, you feel like you've penetrated that initial segment of the market enough, or you feel like you're solving that problem well enough, case studies are coming in, then you can start to expand, right? If you expand too early, then again, you're getting into that sort of mediocre territory where you're doing everything okay, but nothing great. And so let's get on to the tactics then. So activities to complete to dominate a market. So The objective is to identify problems within your market niche so you can begin to hypothesize what is required to solve these problems, right? So you've got your current state, the problems that your market has. So this is from the perspective of your market. So let's say heads of marketing, for example, where are they currently? What problems do they have? And then where are they trying to get to, which is their desired state. The journey between these two states from A to B can be referred to as the transformation. So where are they today? What problems do they have? Where are they trying to get to? What transformation is required to get them there? And that's going to help you then hypothesize what your product needs to be. So I'm jumping ahead here. So you can build a product hypothesis with regards to how your product can be this change agent and what actions must be completed for customers to achieve their transformation. So in product terms, these actions here, so you can see the vertical lines, actions, these can be your product capabilities. And another lens to look at this through is the jobs to be done framework. What job is your product being hired to do, and what steps are required for that job to be considered complete? So to really simplify this, I'll use myself as an example. So I want to run a marathon this October, and I want to run that marathon in 3 hours 30, right? And so I don't want to just like run a marathon. I want to do it in a set time. Now, my current self cannot run a 3 hour 30 marathon, right? That's the 3 hour marathon is 3 hour 30 is my desired state. Where I am today is my current state. Now, what's separating where I am today and this 3 hour 30 marathon is a gap, okay? And there are a series of actions I need to take to be someone who is capable of achieving a 3 hour 30 marathon. I can't just wake up one morning and do that, right? I need to get my nutrition in check. I need to run 4 times a week and all these other actions and activities I need to take, right? And so in the context of B2B, the more clear you get on that, you know, the current state, the desired state, and the series of actions that are required, well, then you can build a product that becomes that change agent. You know, somebody could build a running app. I actually have a running app that guides me through that training program, that helps me take those actions that are going to get me to that desired state, right? So hopefully I've simplified that. Okay, and so it's important to develop a market hypothesis before a product hypothesis. Otherwise, you risk your resources being incorrectly allocated. So how can you know? Basically, you need to understand your market before you can build a product, right? Because how can you know what product, i.e. solution, is required if you're not yet clear on the problems that product is trying to solve? Or who even has those problems, right? And so this is the common mistake founders make, is they skip straight to product. But how can you build a good product if you don't even know why it exists or who it's for or what problems it solves? This is why companies typically build products that nobody wants, or they struggle to get it off the ground, or they spend thousands of dollars or several months building the wrong features and capabilities because they never spent the time to think about what those features and capabilities actually exist, what problems they solve. And so some activities to avoid that happening. So the first one is voice of customer research. So this is a method used to collect feedback from customers. So first of all, how do we do this, right? So step one is you need to schedule some interviews. So select a varied group of customers. I like to speak with customers who recently converted, as their motivations and challenges are still fresh, as well as customers who have renewed. So ideally, they've renewed an annual subscription, or if they're on a monthly subscription, they've been around for several months, because there must be a reason they've stayed, right? So new customers, because you want to know why they converted, and existing customers because you want to know why they stuck around, and that's where you're going to get the juicy insights. Nobody understands the value of a product better than the ones willing to spend money on it, right? If people are willing to spend money on your product, they're willing to invest time, they're willing to sacrifice or risk their reputation in their company to advocate for your product, then you want to know why they're doing that, right? And so here's an interview request you can send to these people, i.e. how do you even get people onto these interviews to get them to say yes, to frame it in a way that benefits them? Let me know if you want this SOP that we share with Growth SaaS clients. Quick tip, offering incentives to these people is going to increase your attendance rate. Just reaching out to people and asking for time usually isn't that successful. So conducting the actual interviews, people are saying yes. Okay, so you want to introduce yourself, ensure you have prepared open-ended questions beforehand so it's a productive use of time, right? You want to, on these research interviews, you want to do a lot of listening and not much talking, right? You really want to give your customers the stage to talk about how they're feeling and their views and their opinions, right? Because the more you talk, the more you kind of force them down these paths, red herrings are going to start to appear, and a lot of bias is going to enter your research, and that's where you start focusing on the wrong thing. So you really want to just let them sing like a canary, and trust me, people love talking about themselves, and so it's not that hard to do. Remember to record every meeting with a transcription tool such as Read AI, because you're gonna refer back to these meetings, right? Whenever you launch a marketing campaign, a new product launch, changing your website, your sales argument, going back and referring back to these meetings is just like gold dust. So don't make this isn't just like a one-off exercise. Store these, you're going to be referring back to them. If you're wondering what type of questions to ask these people, we have a list of them in the Grow SaaS. Just let me know. I'll send them across. Okay, so that's like one-to-one interviews. Another option is one-to-many surveys. So interviews are the best option because you're there, you can dig deeper, you can ask them why, you can ask them to expand on their answers, but not everyone wants to hop on a call and give you 15-30 minutes of their time. And so one-to-many surveys are another data point that you can bring into that to supplement your data. So got some questions here. If you want access to them, just let me know. So you've had a bunch of interviews, you've done a bunch of surveys. Now you need to turn that data, that sort of, I wouldn't say it's raw data, but that information you've received, you now need to turn that into insights that can be actioned, right? Really, really important. It's important you're just not storing this information in a spreadsheet. You're actually reviewing it yourself or with your team, and you're connecting the dots. Okay, what does this tie to? How can we action this? That's where the magic happens. So as we can see here, we go from data to information to knowledge to insight to wisdom. So just something I like to do, I like to categorize any responses in my research into these buckets. So motivation, what motivates them to make a purchase? Value, what do they need to see and hear? And anxiety, what could prevent them from purchasing? This is just something you should keep in the back of your mind while people are speaking. You can also, if you're a messaging nerd like me, you can also start to plot your customer personas on a limbic map, which will help when brainstorming ways to increase brand affinity and emotional resonance, right? So I'm not going to go too much into this. This is more like the psychology of marketing. But just to give you like a real example here is, so in America, it's very popular to have I guess you would call them like far right businesses. So they might sell hunting gear, they might sell guns, stuff like that, right? And so how you communicate to those type of customers that are attracted to those websites is very different to how a business that sells dog beds is going to communicate to their business, right? In the first business, it's going to be all about like dominance, like hunting. They're probably going to have pictures of like the American flag and people in cool equipment, all of these things, right? And so how even down to the words you use in that business is going to be very different to the type of words and graphics you use and the collateral you use in the dog bed business, right? So just to give really two like contrasting businesses there, it's important to think about that. Like, what do your customers care about? How should you speak to them? What words should you use? You can be really, really tactical about this. Okay, so that's customers. Moving on, cold audience research. So this is a method to use to collect feedback from people who are not existing customers but fit your market hypothesis. So they're not paying you, they're not customers, but if you're targeting heads of marketing, then you approach other heads of marketing to speak with them. So to increase the efficacy of your research, you need to combine multiple data points. Speaking exclusively with customers can lead to red herrings because most people don't actually know what they want. And it's possible that your current customers aren't going to be the customers you need to reach product market fit. Inherently, as an early stage startup, your customer base and therefore sample size will be low. So regardless of the form points, you will need more data. So expand on this. It's as a startup, you sort of go through these different phases, right? And typically as a startup, that first group of customers are they're they're sort of innovators. They're people who don't care that your product, isn't the finished article. They just kind of want to support you, or they want to be on the edge. Typically, they're like quite growth hacky. They're sort of people who are always looking for new methods to do things, right? The characteristics of that group of people is going to be very different to the characteristics and attributes of the customers you're going to have at 1 million ARR or 10 million ARR. And so listening to that former group, that early group too much, probably isn't going to get you to a place where you need to attract that later group of customers. So just something to consider. You go through these different stages. And so how that the features, the product you build, and the message you develop is going to have to also change to attract those later stage customers. And then what I mean by sample size, well, if you only have 5 to 10 customers, then it's not a good sample size to start, putting your head down and building your roadmap upon. You need different opinions. You need a larger sample size to remove any bias. And so why you need to speak with strangers, avoid echo chambers, message validation. If somebody isn't using your product, and so therefore have less product awareness, well, they're going to have a different perspective on your product, and that's going to be really interesting to hear. Objections, again, if they're not a customer, maybe they wouldn't become a customer, and so it's interesting to understand why. Are you pricing your product incorrectly? Do they understand your product's value proposition? All of these things are really interesting to hear. New use cases, this is probably the best, one of the best moments that can happen, where they say something or they explain their daily workflow, and they're like, oh, actually, this would be really useful in this area, and something you just never thought of, didn't cross your mind. That can open a whole new realm of possibilities. And then market validation, potentially they say, oh, this could actually help my teammate in this department. And so it opens, again, a whole new door. And so finding these people to interview, I recommend doing this through LinkedIn, using their Sales Navigator product. So you can add these filters, both firmographic, so company, industry, company size, and then demographic, job titles, department, seniority, that kind of stuff. And so if you want to go after heads of marketing, you could just add some filters, heads of marketing at companies between 50 to 250 employees based in the UK, and you're going to get thousands of people that you can put into a list and reach out to. And so requesting the interviews, there's 2 ways you can do this. You can do it automatically. So there's a tool called Expandy, where let's say you had a list of 2,000 heads of marketing. You could set up a campaign that's going to automatically connect with them and send them a message. Or you can do it manually and manually connect with those people and send them a message. It's really dependent on your situation. I know some people are a bit cautious of using automated tools. I'm kind of getting to that stage at the moment, especially, if a lot of customers come from a specific channel, then you should really be protecting and reducing the risk on that channel. But I've used Expandy before. It's a good option. I've connected with probably hundreds, if not thousands of people using it. So it's just going to save you a bit of time. Again, the type of message, what should you send to these people to get them on an interview? It's a completely different context because they are strangers. They don't know you, and so asking for their time is a much bigger ask. If you want access to the SOP, just let me know. And then again, the type of questions you should ask. I recommend reading this book called the Mum Test, which just goes through how to approach research, how to avoid introducing bias to your research, and just becoming a better interviewer when conducting this research. Okay, so that's cold audience research, approaching strangers that broadly fit your market hypothesis and collecting some data. And just, by the way, this is simple stuff, right? This isn't groundbreaking, this isn't black magic, but I couldn't tell you how many founders just pay lip service to this stuff. They think they don't need to do it. They think they know their market well enough. And honestly, the answer to that is you're just wrong. You can never have too much data. You can never speak with enough customers. Founders doing millions, tens of millions, hundreds of millions in revenue are still speaking with customers every single week. And so, it's dangerous to think that you don't need to speak with people, or you already know what you need to do. You already know what your product needs to be. I promise you, this is a dangerous mindset. You need to do the basics well. It's all about building those foundations that people think they're too important or too busy to do. This is the stuff that helps you build $1 million business. Okay, another data point you can get then is message mining. So this is researching instances of your target personas voicing their challenges, desires, and fears about your product category. It lets you spot useful message patterns and swipe the precise syntax used by your target audience so that you can speak to them in a common language and target pain points they care about. This is a secret weapon, right? This takes time, it's manual, but it's an absolute secret weapon. I've personally used this to help companies, startups that were just failing with marketing, couldn't acquire customers at a good cost, to helping them just completely, throw their competitors out of the market. And the reason why is because I took the time to understand what their market cares about, how they communicate their problems, and I literally just swiped those words and I used those words in their marketing, and the end result is you end up achieving message resonance rather than looking like your ads or your emails or your content sounding like every other vendor in the market. You just sound like one of them. You become one of them. And so the first step to this is finding the watering holes, right? So if you imagine in the wild, you have these watering holes where all the animals congregate around because they need to survive, right? The internet is also filled with these watering holes where your ideal customers are congregating in big groups of people. And so if you can find the watering holes, you can find these concentrated groups of your ideal customers. Yeah. Okay. So in most cases, you want the information you're consuming to be as close to the source as possible, right? So something really important is that you want to find these watering holes rather than, say, YouTube or blogs or even like content on social media. Those types of content are optimized for engagement, right? They just want more views. They just want more clicks. They're not optimized for value in a lot of cases. And so the more private the watering hole, the community you can find, the better the insights you're going to find, because people are willing to be more vulnerable. They're willing to say things that they wouldn't be comfortable saying on social media. And so that's why you want to avoid these search engine optimized blog articles and YouTube videos that are just surface level. You want to find these private places. So you can go to public forums, private communities, and review platforms. So here's me doing some lead generation research in a Discord channel, 725 conversations, Quora, and Reddit, right? And then you just go down the rabbit hole. This is why it takes time. You just sort of find one piece of content, read through it, take notes. That then leads you down another corridor. When you go on YouTube and you end up watching videos about random stuff, you kind of want to do that, but in the context of researching your audience, just go from one step to the next. And then after like an hour or an hour and a half, you'll really start to build patterns with regards to what people are saying. And the gold is out there. You just need to know where to dig. Like here's a real life example of me doing this on G2, where I was looking at competitors of the product I was researching. So I filtered to 2, 3, 4-star reviews because I wanted I didn't want just positive feedback. And so this person's talking about a cold email tool they reviewed, and they're saying it only allows you to add one email inbox at a time, which is very expensive to compare to its competitors, right? So this is, I think I closed the loop on this, but this is juicy, right? Because this is a pain point this person is having with their current tool. And so if I'm a competitor of this tool, I can then use that. That's a chink in the armor. I can then use that in my messaging. Like, hey, you can add multiple inboxes and we don't charge per inbox, obviously in a better way of saying that, but that would be the core idea of the messaging that I would use in our email campaigns, in paid marketing, in content, right? So we've gone from an insight, a problem that someone's having that we've discovered, which then we can leverage in our marketing to target. If this person's saying it, hundreds, if not thousands of people are going to be feeling the same. And then eventually you can build your own watering hole, your own community, where every day there are dozens of conversations about what people are doing, what problems they're having, what workflows they've created, right? And so you create this kind of this loop where you just have this never-ending loop of product ideas, message validation, right? And so this is kind of the end state. Initially, go cold, go out to the internet, find these watering holes, and then eventually you can start to create your own. And so what you're asking yourself is, You know, what words do people use to describe their problems? How motivated are they? What happens if they don't solve these problems? And how do their problems appear in order of importance? Because what we're trying to do in marketing is we're trying to focus on the biggest problems, right? What are those problems that when we talk about, it perks people's ears up, it gets their interest, it makes them feel some kind of way? Those are the things we want to work to focus on. And how are people describing those problems? What words are they using? You know, as marketers, as startups, we tend to overcomplicate things. We like to create these labels, these buzzwords for things, whereas, well, that's not how these people communicate. You know, they don't use these buzzwords to communicate their problems. And so we want to communicate in the exact way they are. So we're going to sound exactly like them. We're going to sound like a friend. It's going to resonate with them rather than immediately sounding like a pitch or a vendor. That's where the edge is. And so just to elaborate on and give a framework for categorizing your findings. So this is the MEC Labs conversion sequence heuristic. It's based on thousands of hours of research and gives a heuristic to increase the probability of conversion. So it looks confusing, but it's not that confusing. I'll break it down. So at a high level, this heuristic tells us that people are most likely to buy when they are motivated, which is the M. They understand the value proposition, which is V. They are incentivized, which is the I. Friction is minimized, which is a detractor. And risk is reduced, which is this anxiety, right? So these are what these variables correspond with. So the probability of conversion equals 4M, 3V plus 2I minus F, take away 2A, right? So we want to reduce the anxiety, we want to reduce the friction, but we want to increase the motivation, the clarity of the value proposition, and incentives. And so when conducting the message mining process, consider what buckets the message fits into, as this is going to determine what stage within the buyer's journey it relates to, right? So just to expand on these, and I've got a message mining form you can use here, that when you're doing this research, you can just paste the information into the form and it's going to bucket it for you automatically. So to expand on this, how do we tie certain messages that we're finding to motivation? Well, this is where they're talking about desired outcomes. I want to achieve this. These are the benefits I'm looking for, the pain points and challenges they have, and purchase prompts. For value propositions, when they're talking about features and benefits, like nice to haves, deal breakers, right? Your product's value proposition, what does it need to consist of? Anxiety, the things they're scared of, right? Uncertainties, objections, perceived risk. Maybe it's your pricing. Maybe you're not SOC 2 certified, right? Which is a certificate you get to show how you protect data, right? Which is a big deal if you're going up mid-market, right? You'll see most startups now come out of the gate with SOC 2. These things matter, right? And in most cases, they're not going to message you. They're just going to bounce from your website and go to someone who does have SOC 2, just a real specific example. And so if we refer back to this review, this user was sharing their frustration related to features and pricing, right? And so this would go under the value proposition bucket, right? Because it's related to features. And so this is something you would leverage in your messaging, right? So to really close the loop here, you would put this into your form, you would connect it to value proposition, and then when it comes to your marketing, if you're creating a product marketing ad, or you want to highlight, you just want to do some product marketing in general, you're pushing out a newsletter, some content, some ads, some emails, and you're racking your brain like, okay, what should we highlight? What should we highlight? What should we talk about? Well, boom. Okay, yeah, I remember this person was complaining about this specific feature. That's something we do better. Let's talk about that. So that's closing the loop here, is you're finding this insight and then you're categorizing it and then you're leveraging it in your messaging. Okay, so final, I think, data point is competitive clarity. So if you want to truly create a category leading product, then in most cases, you will need to walk the unbeaten path. You will need to do what others aren't. And the edge is often discovered by not copying people, by not doing what everyone else is doing, but synthesizing your own research, right? Actually going out there and finding your own insights and capitalizing on them, right? This is why this stuff is really important, because most people aren't doing this. They'd rather just go to ChatGPT and go, hey, what do heads of marketing care about? How should I do this? How should I do X, right? People are just relying on regurgitated information. But if you're willing to spend the time and put the effort in to, uncover these insights yourself, then you're just going to carve out a lane by yourself, right? And so a quote by Peter Thiel: "All failed companies are the same. They fail to escape competition." Now, I'm gonna slightly contradict myself there and say that, you know, you've probably heard of the phrase "still like an artist." And, you know, I can sit here all day and say, don't copy competitors. You know, you're going to lose if that happens. But the truth is that everybody takes inspiration from their competitors. Everyone. It's just, you know, there's a reason why most SaaS products, they use blues and purples. Their logos look the same, that the companies are only 2-3 syllables. Everyone takes inspiration from each other, right? This is just well known, and, you know, you'd be a liar if you denied it. And so the best way to approach this is not just copy people one for one, but look at what they're doing and reverse engineer it. Like, what are the building blocks that help them get to this thing? Okay, they've launched this specific ad. Don't copy the ad, but understand, who are they targeting with that ad? What angle are they using within the ad? What format are they using? If they're using video, okay, maybe I should launch video ads. So very different to just copying that ad, but maybe you take away that video ads are the best format to use on Facebook. Or maybe they're targeting a certain size business. Okay, so maybe that's what you should go after. So you're not one-to-one copying, but you're just reverse engineering the sort of building blocks of what they're doing and then applying it to your own situation. And the beauty of this is, for this, you don't even have to look at competitors in your category. You could just look at a high-performing SaaS company that's doing well in a completely different, they're targeting a completely different market, but you reverse engineer what they're doing, and then you apply it to your own situation. Something I've done personally is look at e-commerce brands who are typically really on the cutting edge when it comes to marketing, and then just apply that to B2B. So in a startup, building a technology moat is expensive, right? It's going to take a lot of time, a lot of money. You're going to need to hire really good engineers. You're going to need to have a unique insight to begin with, right? You know, what is that moat going to be? And you might achieve that over time, but in my opinion, this isn't the best path to go down as an early stage startup, right? Especially if you're low, no funded, because inherently you're not going to have a lot of money. In the short term, my view is that you should focus on finding efficiency at the go-to-market level. That's how you beat your competitors, is you're better at distribution. You have a better brand, you identify with your market better than everyone else, you have a better community, you have better product channel fit, you know, due to your product characteristics, due to your pricing model. I think that's what you should optimize for. Over time, as your team grows, you build a better product, you get more insights. That's when you can build a technology moat. So I don't think you should be aiming for that at the beginning. I've got a worksheet here, competitive clarity. I have an example of me going through live of a SaaS company, how I would do competitive research. If you want access to that, just let me know. Okay, so I think we're almost at the end here. So do these activities effectively, and you'll have multiple data points that can be used to form a market hypothesis. So you can expect to find a suitable wedge by identifying what problems are urgent and worth solving. You can find a suitable beachhead and achieve message resonance faster by focusing on a smaller group of people and their problems. So rather than doing an okay job for everyone or multiple groups of people, focus on doing a really, really great job for someone or a small group of people. You'll get better results for early customers because you're focused on their problems and over-delivering. You'll experience better efficiency in marketing and sales because you have a stronger, more potent value proposition because you're focusing on a clear set of problems. And you'll generate a proof of concept, right? This is kind of the milestone, the outcome, you know, proof of concept that, wow, okay, this product I have built actually delivers that transformation, actually delivers the promise that I'm making on my marketing, right? If you can't generate testimonials and case studies, you can't have evidence that your product delivers a quantifiable business outcome, then you've still got more to go, right? You're still in that nice to have territory, right? So you want to strive for building a product that can generate business outcomes, and you have proof that it does it, because that's going to allow you to attract either more of the same personas and niche, or expand into further niches, right? So that's it. Four-ish data points that you can collect, forming your own insights that are going to allow you to identify that small entry point in your market and just solve a problem or focus on a small group of people, do something really well, which is then going to allow you to expand. So next steps from here, recommended resources. So I've got a 2-hour workshop on how to beat an entire SDR team for $700 a month, the new way of doing cold email in 2024. Something I've started recently, just more casual, is Startup Chat. So this is a playlist, just 10-minute rambles on specific topics, just something more casual and conversational. If you want to work together, you can visit growsas.com, book a call, and we'd love to speak with you. See ya.